Hello, everyone. Welcome to the market update for Tuesday, July the 5th. Hope everyone had a good 4th of July weekend. I always like those long weekends, although it throws my week off whenever there's a market holiday. Today still feels like Monday. I almost forgot about the class today just because all morning, all day, pretty much so far, I've been thinking it's Monday. But anyway, let's get started. If you have any questions during the week or any that I don't get to in the live class here, make sure you send those to jerry@traderspro.com. Now, I talked last week a little bit about the seasonality of this time of year, July 1st to about July 5th, that first week in July, although most of that's taken place so far over the weekend when the markets have been closed. But that typically is a very bullish time of the year. It's the markets are up about 80% of the time. Now, again, I also talked about how you should never make trades just based on seasonality alone. I know some of you are maybe looking back, especially with the rally we had, a little bit of the rally we had on Friday, and say, boy, I wish I would have just traded that, or I wish I would have just traded the stock, knowing it tends to be a little bit more bullish time of the year. Friday, I wouldn't have traded anything on Friday. It was that day was so volatile, and I think it was so volatile because of the fact that most of the fund managers, most of the big money traders were already on vacation. They're taking a day off, and so there's not as much volume. There's not as much conviction in the buying or selling. And anytime you have less liquidity or less participants, you can get a little bit wider fluctuation in prices. We were kind of back and forth. It was kind of weird, and we saw something weird too, where the market was down and the VIX was down, and it was usually that is a reflection of usually that's a reflection of professional traders not at all worried about the selling that's taking place. But again, when you know that most of those big fund managers are on vacation or not really trading much on a day like that, it's harder to read that signal. I didn't put so much weight on that signal, although markets have rebounded today. We have a really mixed market today. The underlyings of the market, though, are looking a little bit more bullish, and we'll look at that when we look at the charts here. So it's still, I think, kind of reflecting that a little bit of that seasonality. It is important to understand some key things that are happening this week. The Fed minutes are going to be released tomorrow. Again, this is not a pattern that you'll see all the time, but it's been a pattern over the last month or so, or actually the last couple Fed meetings. That when the Fed meeting has taken place, we've seen a little bit of a market rally right afterwards, and then when the Fed minutes are released, which is usually about 3 weeks later, the market is sold off. The last few sell-offs have started with those Fed minutes being released. So, and so now again, you don't want to base a trade on that alone. But what we want to look for is if the market is rallying a little bit here, does it stall out, or do we see any sort of bearish reversal that could indicate that it may follow that same pattern? And the problem, and we'll see this here when we get to the chart, is that we're kind of in a no man's land right now where we could really go either way. So it's going to be a little bit difficult to kind of predict which direction the market might go off of that. Now, there's also a jobs report this Friday. First Friday of every month is a jobs report. Now, again, another thing I want to point out is that the market has a tendency to focus on certain things at certain times. Meaning anything related to, right now it's inflation. Anything that can have anything to do with inflation is the focus, and the market will react and sometimes overreact to news associated with that thing it's focused on. but it's important to realize it's not going to be focused on that forever. So, if you're saying, boy, jobs report, this is huge every month, the market is just going to take off or drop off of that jobs report number. No, there's a lot of periods in the market where the market just it doesn't really care what the jobs number is going to say, at least as far as creating a big move. I'm not saying it ignores it completely, but when you're in a healthy economy and the jobs number is slightly better or slightly worse, the market just isn't going to really focus on that or care much about that. So the point I'm trying to make is that you've got to. This is why some people say I don't want to watch any news or go to any financial websites or anything like that. This is why you kind of. And I get that way sometimes, where I want to just focus on the chart and the price action when it's actually taking place, get rid of a lot of the noise out there. But I do think it's important, even with your going off the chart or reading the chart, that you understand what the market is focusing on at that moment, and so pay attention to that. And you don't have to be a genius to try to figure out what it's focusing on. Just what are people talking about? What do they keep bringing up over and over? If they're bringing stuff up over and over the period of 2 or 3 weeks or so, then that's what the market is focusing on. That's what's really affecting the direction up or down. And you want to at least be aware of that, because you can take advantage of it. You can go into we've done that with oil. You go into the oil sector. Oil's been was going up. It's had a big drop here today, and we'll look at that chart here in just a second. But that was a big focus. Everyone was talking about how oil was was trending up, and there's a lot of focus on oil, and so we traded it. We took advantage of that, and we focused on that sector for a period of time. All right, so as far as the direction alerts, again, we're looking for extremes. Obviously, we do have an extreme on the long-term bear market signal. We're at the far left side of that. Again, for those that are new, I'm kind of waiting for a panic sell-off to kind of indicate that we're at the bottom. We haven't seen that yet. I think it's coming at some point. The question is, trying to figure out when. We can't ever predict that perfectly, but we're hoping we get a little bit of a signal before it happens. A lot of times that does take place, and if I see it, I'll tell you. The other indicators are just kind of not really showing us much. They're right in the middle. Momentum, or close to the middle. Momentum is right in the middle here. What you usually like to see are you reaching extremes on either side? This would be an overbought extreme. This would be an oversold extreme. That can help you tell if there's a chance that you could be in a trend reversal. Until then, you're going to go with, if you're in the middle, you're kind of assuming that current trend is going to continue. So the current trend is down. As long as we kind of stay in the middle areas here, well, we're not going to get to this area in the downtrend, but as long as we're kind of in the middle area here, in this case, you're probably looking at this area in the downtrend, sell to hold in this area. You're assuming that trend is going to continue. If you get into the extreme, it doesn't mean that you're going to reverse into an uptrend, because we have been in an extreme before. It means that you're probably due for a bounce. You're probably done. You probably had a really big drop, and you're in a position where you could bounce or possibly reverse the trend. But there's a little bit more of that bullish risk when you get to this extreme area over here, and particularly when you're at the far left side of that. So what it's telling us right here is that we're still in a downtrend. The trend should continue, is what it's telling us right here. Although when we look at the chart itself, like I said, I can go over a couple of scenarios that we can be looking at over the next few days of how it might play out. Breadth is still in the high, or in this high range right here. It is, again, it's not in the extreme range, and so we're not looking any sort of oversold condition right there. Sentiment has been relatively high still, and this is something, again, for those that are new, I would expect at the very least we'd see sentiment get into the either the trending or the fear area when we're at a bottom or very close to a bottom. We're not trying to pick an exact bottom, but we want to see some of these characteristics that define almost every bottom that takes place. And one of those is we just haven't had any fear in the selling yet. We've had concern in the selling, but not that fear, that panic selling that usually is characteristic of a bottom, or that you're near a bottom. As far as the buy-sell ratios, again, they've kind of come back. They started to widen out a little bit, and then they've kind of come back a little bit. Well, it'll be interesting to see how what we have a mixed market today, and a pretty distinct mixed market. Usually in most mixed markets, a mixed market is when one or two of the indexes are up and the other two are down, or you could have three of them that are up and one of them's down, or one of them up and three of them down. It's just that you have different indexes moving in the opposite direction. The Dow has been down as much as 2%. It's now down about 1.5%. The Nasdaq though is up 0.5%. So that's a pretty big. Usually on most mixed markets, it's just barely. The Dow might be up 0.5%, and the Nasdaq might be down 0.25% or something like that. It's usually not this wide, this big of a difference. So, although the price action though of the day, and that's what we'll look at. We look at the chart, is a little bit more bullish. It's kind of a little bit of a bullish reversal day. We opened a lot lower and we've recovered, and we'll see how it closes. Obviously, that could change, but it's looking like a little bit more of a bullish reversal day today. And then the sentiment indicator is kind of right in the middle here. We're looking at extremes on this one. It gets down to here, it's an extreme oversold. You're probably due to rally. Gets up here, you're pretty overbought. You're due for a little bit of a pullback, or you're in a position where you could see that. And then you start looking for the chart, the price action, to tell you when that's more likely to take place. All right, let's get to the chart here. And you can see you had a little bit of a, you can see the back and forth. Here's where we closed on Thursday. We opened about where we closed, a little bit lower, traded all the way down here, and then came all the way back up, closed up here. So it was, and in the meantime, it was waffling back and forth during the day. And so when I see that type of behavior, it's a reflection of indecision. And so I usually don't like to do anything on those days, as far as, because, I feel like I'm guessing, am I doing a bullish trade or a bearish trade? And so I tend to not do too much on those types of days. Kind of the same thing taking place today. We opened lower. So here's where we closed on Friday. We opened down here and then traded all the way down to here. And then we kind of reversed that. We come back up, and now we're trading at the highs of the day. Even though we're still down on the S&P from the close on Friday, this is a bullish price action right here. It's a bullish reversal that's taken place. Excuse me. So, and the difficulty in obviously the trend is down. So Fed minutes were released around in here, and we dropped. I think it was back in, is either right in here or right in here. I can't remember, but we've had these drops since when the Fed minutes have been released. We've had these drops that have happened. They haven't been huge drops, but they've been declines that have happened afterwards. Now, what's a little bit different here is we've already started to move down, whereas a lot of these we were moving sideways before those came out. So who knows if that'll continue. The problem where we're at right now is, yes, we're in a downtrend. We do have the distinct lower highs, lower lows, but we've had this little drop right here, and then we've kind of stalled out right in the middle right here. So what I'm looking at here is, you could make an argument this was a bearish ABC pattern, did have a little bit of sideways movement right in here, and that could have been your wave A, wave B, wave C, meaning that this could be the start of the move down. This is just a little brief correction of that move, and then we go down and go to a lower low right away. So, your argument could be that that's where we're headed, and the catalyst is probably going to be either the Fed minutes tomorrow, or the Fed minutes combined with the jobs report that comes out on Friday. That could be the reason why it drops. But there's another possibility right here, especially seeing a couple of these bullish reversal. Had a bullish reversal day, like I said, on Friday. So we had an indecision day last Thursday, kind of a bullish reversal day on Friday, another kind of bullish reversal day today. There's another possibility here and that is that this is wave A of the bearish correction. This is wave B of the bearish correction. And then we get a wave C that puts us up into this area right up in here. And then we drop. Now, this would be a short rally, probably over the course of about a week or so. There's a lot of resistance in this area right here. We pointed that out. So I don't know if it even gets up that high. Maybe it just gets back up into this area right here and then drops. But that's a possibility that we're going to drop, but we're going to drop, a week or two from now. We're going to attempt to rally here in the near term. So this is where this is usually a situation where I don't do too much. And I can trade both directions. Mostly in this class, this software is designed to find bull markets. It's designed to be a bullish software. And so you have a period like this where it could go either way, or it feels like it could go either way. I've told you many times, I don't like to feel like I'm guessing or feel like I'm flipping a coin. I like to have a lot of conviction. Doesn't mean I'm always right in my conviction, but I'd like to feel pretty confident that we're going to be rallying up. I don't need to time it perfectly, but I'd want to feel a lot more confident that we're going to move higher or lower, depending on that. And in this situation right here, seeing that it could go either way. And again, you're right in the middle too of this little upward move. You're right in the middle of that. You'll see me do this a lot, and this is a simple way to deal with something like this. Is you could simply, if we get above this area right here, that'd be bullish. If we drop below this area down here, that's bearish. We're likely to continue to go down. In this context, breaking above here doesn't necessarily mean you're going to start trending up, but it would at least you're starting to act like a trend reversal by going to a higher high. That's clearly a lower high right there. But that's something that you would kind of pay attention to. Right here, we're kind of in no man's land, and it could go either way at that point. So we'll see if Thursday's giving us a little more clarity on that. Usually in this type of market condition, I don't want to do too much. The Dow is down, and it's the index that's down the most. But it also has a little bit of a bullish reversal, although you'd like to see it trading at the highs of the day or higher than where it opened. It's basically trading about where it opened, which is still a gap down from the close on Friday, and that's why it's still showing that it's down. But see, this is why it's important to be able to read these candles, read the price action, because if all you're doing is looking at your screen, you're seeing the Dow's down 400 points and that's or S&P is down. It's immediately it's looking very bearish and very negative, and that's what happens with these analysts on CNBC all the time. Is that's all they look at. I don't know if they know how to read a chart or read price action, because they'll say the market is down, that's bad, it's negative, and if you simply can read the price action, that's actually a little bit of a bullish type price action if it can close higher. And the fact that it's recovered from being down a lot further during the beginning of the day. And so, again, that's why, if I just hear the market's up or down, it doesn't mean anything to me. I gotta see the chart, and I always want to see the chart to be able to determine, whether it's down and probably going to go lower, or if there's some sort of bullish reversal that could indicate it could bounce or rally back up. But this Dow is still in the same chart area here that, again, we're right in the middle of this. Again, it could be that this is the bearish ABC and we're heading lower, or that this is just wave A, wave B, you get wave C, and then it drops. So we're kind of in the same boat there. And same with the NASDAQ. And the NASDAQ, the Qs, NASDAQ 100 are, they were positive. They're right around that positive, right around break even. They've been kind of going up and down there. This might be a little bit delayed though too. Because last time I saw it, I thought it was the NASDAQ 100 was positive, but again, the charts all look about the same. Russell 2000. All right, we'll see if that changes on Thursday. Bonds are up pretty strong today, but again, I talked about this before, that we might see this could be wave A, wave B, wave C of a bearish ABC pattern. And then maybe see a continued decline. We saw that back here. Same kind of thing happened back here. Although this is looking a lot more impulsive, a lot stronger than it did back in here when it had that final move before dropping. If this is a key area right here, if we go above that, that would be a higher high. And usually what you're looking for is you'd like to see this look a lot more impulsive when it breaks above them, meaning going straight up pretty much, no sideways movement there. If we go straight up and go to a higher high right here, that could indicate that maybe we're looking at a possible trend reversal in bonds. Now, the Fed minutes tomorrow and the jobs report on Friday are really they're going to have an effect on where bonds go, big effect, because and so that could cause us to maybe reverse and start moving back down again, or to break through there. But if we see a positive result off of those two news events taking place and we break to a higher high, it's possible that we're in a trend reversal on bonds. We'll have to keep an eye on that. Yeah, so, and again, you can see you're getting lower highs, lower lows all through here. Lower high right here, lower low. And the first signal of a trend reversal, again, doesn't always mean it will reverse the trend, is that higher high. And then when it pulls back, you get a higher low. You already have a little bit of a higher low right here, but that could be part of that bearish ABC pattern. But if you break out, now you've got a higher low and a higher high. And then again, if it pulls back, it gives you a higher low. It's acting now like an uptrend. And that's just basic trend analysis 101. It's something you have to learn to recognize, is just that trend, especially if you're going to call yourself a trend trader, you got to learn how to recognize these trend characteristics. And they seem kind of kindergartnery, if that's a word, but they're in oversimplistic. but they work if you know how to master them. You can recognize some of these subtle changes that are taking place, and you can get in earlier into those trends when they reverse, because you can recognize when they're starting to act like an uptrend. Gold had a big move down today, but we weren't too surprised about that. But this is one of those where we kind of drew the lines. I said, we were kind of in that no man's land, and I said, okay, if we break above here, that'd be bullish. If we break below here, that'd be bearish. Last Thursday, we moved right down to the line. I said, typically when you move, you're right at the line, you're probably going to break below it. And we did. Today was a big move down. Now, a lot of the commodities are really getting hit today, and I think part of the reason why is there was a big jump in the dollar. We'll look at the dollar chart here in just a second. Why is that significant? Well, commodities and the dollar tend to move in the opposite direction. So when the dollar is strong, usually commodities like oil and gold and silver are weaker. When the dollar is weak, these tend to be stronger. And so, that's a normal relationship. So it's not surprising then to see all the commodities down today with the dollar showing a big move up. We'll look at the dollar chart here in just a second, but here's oil. Oil is really big move down today, but this could just be wave A, wave B, wave C of a bullish ABC pattern. We'll have to wait and see on that. Now, especially as it relates to oil, this also could be a reflection that the market is anticipating that we're in a recession, or we're going to be in a recession. There's a big argument right now. Some people are saying we're already in a recession. This always happens, by the way. There is no clear indication of a recession, and there's different people have different definitions of a recession. There's no one clear definition that everyone agrees on, and so you get these periods, especially early on, and some people say we're on the verge of recession. Some people say we're in a recession. The fact that oil is dropping, and knowing that there's a shortage of oil, has been a shortage of oil around the world, it could be the market's way of saying that it believes that we're in a recession, or that we're very close to recession, because that could put pressure on oil prices to come down, because usually there will be a lack of, or a decrease in demand for oil in a recession. But I still see a shortage of oil for a while. These things don't get solved very quickly. They tend to take time, and so it could be this is just a correction, and then it starts to rally up again. I'm not seeing that yet, and this may not be a correction. It may be the start of a downtrend, so we don't want to just assume this is a bullish ABC pattern, we're going to go up. But I do want to point out that this is an area right here where we'd start to pay attention to starting to move back up again, maybe a little bit lower. In fact, you've got a lot of support right in this area right here. As it gets to, one of the characteristics of an ABC pattern is that it will typically end when wave C is about the same length as wave A. About is the key word there. It can be a little bit shorter, a little bit longer. But we're already in an area here where wave C is getting close to the same length as wave A, and so you could this is an area where if that is a correction that's going to end here, this is the area where you'd look for it to end, particularly since you have a lot of support right into here. Now there's a support level right down here that's a little bit lower than that. Maybe it gets down to that. There's just a lot more touches along this area, which is why I'm paying attention to that one first. But like I said, if it breaks down below there and it breaks down below here, now you're saying maybe this is just a downtrend. Now you're in a downtrend, a trend reversal in oil. And for many, that's good news, because it means that you're not going to feel like you're spending half your paycheck on filling up your car. But if you're long oil, that's not going to be a good thing for you if it's now in the downtrend. But that's what I'd be looking at, those key support levels. This one right here, which we're just shy of, and then this one right down here. But because that support area is down a little bit lower, I'd assume as bad as today is that we still probably have a little bit further to drop. I don't want to be long oil, but and now I was talking about this possibility. Remember back in here, I got it back into USO because sometimes you can get just a straight correction that goes right back up again. But remember, I got out of my USO on this bearish engulfing pattern. That was a trend reversal candlestick formation. You have an upward move. You have a bullish candle that's smaller. You have a gap up the next day that then trades below the candle from the day before. So it completely engulfs the day before in the opposite direction. That day was up. This day was down. And so I got out of that oil trade. And I said, I think I might want to stay away from oil right now. I didn't want to jump in anything else, and that's a good thing. It dropped. So again, I'm not suggesting that these are always going to work. These candlestick formations don't always work. If they did, that's all we would focus on, and we'd never be wrong. But you got to learn to recognize those little clues because they can help you in your trade management decisions. I knew that didn't look bullish, even though I've had a few of these that you get a bearish engulfing pattern and then it goes right back up again. But that's okay. Guess what? You can also get back in. I could also, at that point, I could wait maybe until it breaks out, buy the breakout. I think that's important psychologically that I've taught all my students over the years, and I haven't brought that up, I think, for a little while, but you've got to develop what I call a bus stop mentality for your trading. You're going to get another opportunity. You're going to get another chance. The market is always going to give you chances to make money all the time, up or down. If you can trade both ways, up if you're only trading one direction, up, you have to be even more patient because you got to wait until you get those upward, high probability upward trends, or you find them somewhere, whether it's oil that's trending up, or then you find another sector that's trending up. But, can you imagine being at a bus stop and seeing the bus take off, missing the bus, and you're running after it? This is the end. I'm never going to see another bus in my lifetime, and you're running after that bus. It's ridiculous. Everyone would look at you like you're a fool, right? Just sit at the bench. There's even a bench there for you to sit on, and 20 minutes later or a half hour later, another bus is going to come around, right? You don't have to run and look like an idiot. Well, you have to have that mentality in the markets too, that there's going to be another trading opportunity. And so if you understand that, then you don't make a lot of mistakes that traders make. They get impatient. They feel like I got to do this now. Okay, let's say this is showing a bearish reversal. I get out and then it reverses right back up again. That's okay. Because guess what? I could then wait for the breakout, and I've got another opportunity to get into that trend. If it breaks out, it should continue to move higher. And if it doesn't, and I get stopped out again, well, guess what? It'll give me another opportunity to get in at some point in time. Or if you can trade both directions, it's like, okay, I was hoping this was going to take off and go higher. It didn't. It gave me a bearish reversal candle. Okay, I get out of that trade, and I don't like to short stocks, but I do use put options when I expect a stock to go down. I could get into some put options, and I can trade that move, make money on that move. You're going to get other opportunities, and so if you see a bearish price action, and you're and again, I'm not suggesting you're going to be jumping in and out of these things every day. That this is designed to be more of a position trading type class and software where you're looking to be in these trades for several days or several weeks, maybe even several months. but learning to recognize these little subtle price actions along with the context of the chart. When I got that bearish reversal candle, then I'm looking at this as, okay, this wasn't a real choppy move down. This wasn't a real ABC move down. It was just a straight move down. Maybe that's just wave A. I'm getting this bearish reversal. Maybe this is wave B, and we're going to come down here in wave C. Now, what I'm looking at is, okay, do I get a bullish reversal candle? Especially if I get one right at one of these support areas. Well, maybe then oil is going to reverse back up. And now that doesn't always work. We'll look at the ADM trade here. I might be getting stopped out of that, and maybe today or tomorrow. Who knows? But it doesn't always mean that is an ABC pattern, or that ABC pattern is done. All right, the dollar, you can see right here, had a big move up right here, broke out of this range. Now we were looking at this as a bullish pattern anyway. We were looking at this as a kind of a bullish couplet handle formation. Well, that wasn't much of a handle there. It really just took off. I was thinking maybe it would come back down. This Thursday we were looking at this as a little bit of a bearish reversal candle. Again, here's one that didn't reverse back down. I thought maybe it'd come back down here and then maybe break out, but it broke out. So the strength in the dollar explains the weakness in commodities. Gold broke down, oil broke down, and commodities like wheat, corn, those are showing weakness as well. And remember that ADM trade is a commodity trade, so it's not surprising that to turn back down again. We'll see if the dollar continues to move higher. It could be this is an exhaustive move, because we gapped up, but we're really not going anywhere. It's showing kind of, the candle itself is showing a little bit of an indecision. Doji is another word for that. Now, here's an indecision day, and just kept going up. Indecision doesn't mean that it has to reverse, but you often see indecision before reversals, is why we pay attention to them. You always need confirmation. You don't ever trade just a indecision candle, unless you're just trying to guess the direction, or guess that it's going to reverse trend or change trend direction. But we'll see. Thursday will probably give us a clearer idea of what the dollar is doing. Maybe it pulls back. Maybe it comes back and fills in the gap right here. A lot of times you'll gap up like that and then come back down and fill in the gap. Trade, and that just means you're trading. Here was an empty period, the price area here. A lot of times stocks will come back and trade in that area. You can see it right here. Here it gapped up and then gapped up again. And then right here, these traded into the area of those gaps. And we call that filling the gap. And typically stocks will, at some point, they typically will fill the gap. Although on equities, you don't always see it. Commodities, usually you always see it, which is why commodity traders, the gaps are very critical in chart analysis of commodities, because they almost always come back and fill in those gaps at some point. All right, so dollar strength, VIX. Now the VIX was starting to move up right in through here, and you can see kind of the weird day on Friday. It moved up and it came way down, and there was a period there where the market was down and the VIX was down. In fact, there was like a 5-minute period where the VIX was down, and then it came all the way up, and yet the market really wasn't moving at all, and then came all the way back down again. And it was like, whoa, something just happened there. And that's really what caused me to be skittish on Friday about getting into any new trades, is because I'm like, that was a weird move on the VIX, just a real sharp move without any underlying movement in the market. And I couldn't figure out what it meant. It was, especially understanding that the big professionals were mostly taking the day off. Was it some manipulation going on because of that lower participation. It was easier to you get traders, big traders that could move prices a little bit easier when there's not as many, when you have lower volumes. Anyway, so that kind of spooked me out of doing anything on Friday. Today it's up a little bit with the S&P being down a little bit, although the S&P is probably getting close to being flat. It's still down a little bit, 0.25%. But that the candle is a bear, even though it's the VIX is up a little bit. It's a bearish. It's a little bit of a reversal candle, because here's where we closed on Friday. Here's where we opened today with the big move down, and we're up a little bit. And now we're still up, but we're at the lows of the day where it's a bearish candle. So that would tend to be more bullish for the market. Again, we could go either way, and especially not knowing how the market's going to react to that Fed minutes tomorrow. Chip stocks had a big bullish reversal candle today, opened all the way down here. They're still showing they're down again, but this is why it's important to read price action. It's showing that the chips are down 1.5%, but this is a pretty decent bullish reversal candle. We should see a bounce, and it could be a bounce like this, where it's real choppy, and that would be looking like it's just a correction within the downtrend. But that we should see a little bit of a bounce in chip stocks, which is why I'm not holding the SOXS. Although that would have opened up today, at least. But that's what, for those that are new, that's what I've been using to kind of hedge the portfolio a little bit. I only have one position right now in the portfolio, so there's not much I need to hedge. And then the transports, again, they're not showing us anything significant, basically what the rest of the indexes are showing us. Bitcoin up a little bit today, but again, overall, here was a little bit of a correction. We had this sharp drop. This looks sideways right here. We're probably still moving lower, although as I've mentioned a few times, I think that Bitcoin is going to bottom before the markets do. So we're going to keep an eye on that, see if we start seeing any signal of bottom taking place, and maybe the start of a new uptrend in Bitcoin. All right. As far as the portfolio is concerned, I got out of I was holding the SARK. That's the opposite of the ARK Innovation Fund, ARKK. But some of those small caps had a bullish reversal. Let's look at ARKK. So they've had a strong day today, and the way with the market opening much lower and these not down very much, I recognize that, and as soon as it started to move up, I recognize that these could have a strong day, and so I got out of the SARK. SARK is the opposite of this one, and like I said, it'll go up when this one goes down. I was using it to hedge, assuming that this would also go down with the market going down. But SARK is the opposite, inverse ETF. That's what they call it. You can see it's had a pretty big down day. And then the only one I'm holding is ADM, and this is down pretty big today. Now it did dip below. I have my stop right below here. It did dip below there, and you say, well, how come you didn't stop out of it? Well, I like to usually see if it's going to close below there to stop out. Remember, I've talked about this before, but it's worth bringing up for new people. I don't use hard stops, meaning that I don't put in an actual order to just sell as soon as it gets to that level. And the reason I can do that is because I'm not afraid to stop out. I'm not afraid to admit I'm wrong, and I'll I shouldn't say more than happy. I'm never happy with a loss, but I can accept a loss. And because I can trust myself to stop out of a trade, I don't need to have a hard stop. Now, if that is something you struggle with, and you're trying to develop that discipline, then use a hard stop. Have an automatic stop order that'll trigger and get you out right there. Okay, because it is important that you stop out of trades, especially recognizing you're wrong. Now, even if we don't close below here, we're probably still going lower. This is a big move down into a support area. Usually that support area isn't going to hold. And so, in fact, I'll go ahead and get out right now because it's probably going lower. And if not, I can always get back in again, right? Again, that bus stop mentality, it's not that big of a deal. And we only have an hour left before the market closes anyway. And like I said, I still would probably end up getting out of it just because it looks like it's acting, even though it's bounced a little bit right here, it's still acting like it could go lower. But remember, this is what I was looking at with oil, and this is what I went over with you when I got in this trade, is I got in this trade because it looked like this is a larger ABC pattern, looked like wave C is about the same length as wave A. We started to move up, had a bullish reversal candle in here, started to move up. Now, it could still be that way. You know, this is the textbook. You have an uptrend and then A, B, C correction, and then you trend back up again. That's the textbook definition of an ABC pattern, or what you would expect there. It doesn't always play out that way. This could go lower, but just a little bit lower. There is some support resistance in here. Maybe it comes down to here and then starts moving back up. That could still be an ABC pattern. Wave C can be a little bit longer than wave A. It can be a little bit shorter than wave A. It doesn't have to be exactly the same length. So this still could end up being just a correction and going higher, but it could be in a full-blown downtrend. You know, it could come all the way back down. And in other words, the point I'm trying to make is that I'm stopping out right now. I can always get back in. And it may be that I don't ever want to get back in because it is trending down and is not going to recover. But if you're wondering how come this is making that big move, what's caused this big move down? Well, it's pretty obvious because when I see oil down big, gold down big, other commodity related stocks down big, and the dollar up big, that's what it is. It was that big move up in the dollar, and that freaked out the traders that were in these other commodity stocks. Okay. So let's go ahead and get out, and that means I won't have anything in here. I'm going to go ahead and sell this at 72.14 is the current, showing as the current price, and then 20 shares. So I'm going to lose about $500. And that's what I knew that going into the trade. That's where I put my stop and calculated that. So, but that's all right. We're going to go ahead and sell that. And we'll see. We'll see if there's, well, I'd like to kind of get a little bit clearer direction on the market. And again, the ones that we've been, you look at not only did all the oil stocks getting hit, but look at what's happening with remember the other area that we traded a lot that was outperforming the rest of the market were the defense stocks. Northrop Grumman, NOC, look what it did today. Big move down. Raytheon, RTX, in big move down. These all have big moves down. So, I don't. There's really no area I really trust right now to jump into, because these were the last ones that were kind of holding everything up. And again, I'll tell you, remember on Thursday, what did we spend our time on? We spent our time on utility stocks, right? Look what they're doing today. Look at EXC. This is one of the ones that said to keep an eye on. We were looking at this as being a larger ABC pattern, correcting that larger trend up. And these just got hit today. So what's scary about this is that these were kind of the safety areas to get into. What's developing right now, if this continues, is you've got traders that are saying, where am I going to go? I can't go into commodities. I guess I could go into the dollar. But even then, that was given a kind of an indecision candle today. I can't go into aerospace anymore. I can't go in oil stocks, commodity stocks. Now, for us, we're in cash. It's not that big a deal. We're okay. We're in cash. We're not doing anything. We're not losing any money. We're not making any money. But imagine if you're a fund manager, you can't just sit in cash and tell your clients, oh, I decided I'm just not doing anything right now, and you're not making any money. Good news is you're not losing any money, though. How's that going to fly? That really ticks people off when they're paying you to make them money and you're not doing anything. Now, that's the ironic thing, is that should be the smart thing to do, right? You're actually helping your client because you're not trading in a poor trading environment. But that's human nature, right? Human nature is, I don't care. I want to make money. I'm paying you. You got to make me money. That's why, and this is not just in the markets. This is in life in general. Many of you probably experience this in your own professions, where the truth is not always what people want to hear. And so, you give them what they want. They even if you know that it may not be the best thing for them, you end up avoiding the hassle and saying, okay, you want it? Here you go. You can have it. But it may not be the best thing for you. It's just, but we can do that. We can sit in cash because we don't have that outside pressure. But these big fund managers, they've got outside pressure to do something. And the reason why I'm pointing this out is it's important to understand the psychology then of what they're going through right now, because they're going to be forced into things to get into it. And then when things start selling off, they're going to be panicking because they wanted to avoid losing money, but they were forced into making trading decisions to get into something. And in this case, what was working? Oil was working. Okay, I can at least get into oil and it'll show I'm in something. Aerospace was working. Okay, I can at least get into aerospace. That's working. Commodities are working a little bit. And then now, boom, nothing is working. And now it's like, where do I go? Maybe the bond market, although bond returns are terrible right now, but could the bond market be could it be reversing back into an uptrend? Hold on here. Just gonna pull up the TLT chart. We looked at that. Could it be reversing back into an uptrend? Well, we don't know. This could be a bearish ABC pattern. And if they start dropping, okay, now really, where are you going to go? So these are things that could fuel a panic sell-off. I'm not saying it will. I'm not saying it's going to happen here, but if you're looking for little subtle clues, we're building towards that at least. And that's what triggers a lot of these things, is that these fund managers have nowhere else to go. They're the ones that move the market, and they maybe were forced into some of these areas, and now they gotta get out of everything, and that's what can kind of start the panic selling that can take place. So we'll see if it does happen. Then you've had this little training ahead of time that there were these clues that were preceding it, that you can kind of see it starting to take place and starting to happen. So we'll look like geniuses if it does end up getting a panic sell-off here. All right. I don't want to end on a negative, big negative note, though. So let's look at a potential chart. Let's go into the sectors here. I went down into business services. I didn't see a lot, by the way, that I really liked. But this EXLS at least was interesting to keep an eye on. 96 strength rank. Let's switch this over to signals here. It has a hold signal right now, but what I was looking at is, okay, we're in a breakout area right here. It hasn't broken out significantly yet, but we did have a higher low right here. And what I'm looking for is, do we rally back up there with another higher low? There's pressure building to break out. I would probably buy the breakout, though. I don't think I'd get in before that, especially in these market conditions. But this is something to keep an eye on. If it does move up and break out, that's a pretty bullish formation there. And with these, and it's not a perfect kind of cut pattern, but have a kind of a little bit of a cut formation there. Usually when you break out, it'll end up going up about the same distance as the upper part of the bowl and lower part of the bowl. And so a breakout that holds here, it's tried to break out, but you get a clear breakout there, and it should go back to a buy signal if it does that. That could be one that could start to take off. So I'm going to go ahead and add that to my watch list. So I can keep an eye on it. All right. That's all I have. We'll see if things change by Thursday, or at least get a little bit clearer by Thursday. And we'll kind of go from there. All right, everyone, have a great week. We'll see you Thursday for the stock-specific class. Bye now.